Everyone, welcome back to the channel. Hope you guys are great wherever you are. I'm going to talk about something today which is actually related to a topic I've mentioned in previous videos, which is a bit of um, a controversial law that was passed within LA, or the city of LA, called ULA. Now, you may have heard about it, called the mansion tax. And actually, when I became a US citizen about a year ago, I went into my first ever midterm elections. And in those elections, I knew what the status of this ULA measure is. And I was reading through, whether you vote yes or no on it. And it was actually described in the bottom parentheses as being the mansion tax. Now, that is what it's known as. However, because I'm in real estate, because I'm an agent, obviously, my opinion on this is negative. I think it's not something that benefits anyone in any way. But obviously, I think there are a lot of voters out there who see these massive sales of properties going for huge amounts of money, and therefore think that that money should be taxed in an extra way because these people can afford it, and used in alternative measures. A lot of this was to go towards affordable housing. And it's quite interesting because generally, obviously, it's been received by agents as very negative, as I said. And what I actually realized, because I knew about this measure before, is that it did not just apply to single family homes. This was not for mansions. This was, even though it's called a mansion tax, this was for every single piece of real estate that was sold. Now, if it was above 5%, sorry, above $5 million, it would have a transfer tax. So that is paid at the point of transfer of 4.45%. So a pretty huge amount of the actual purchase price was then put on top and was not allowed to be part of the mortgage or any lent funds. It had to be part of the actual like cash that effectively would be put into that transfer at the point of the property closing. Now, that's even higher if you're over $10 million, and that is 5.95%. So to give you a quick overview of why I think it's negative, this applied to all real estate. So whether that's commercial buildings, which a lot of them are obviously above that $5 million mark. They're big, they've got a lot of square footage, and therefore they are at high prices. And even properties that are multifamily residential. So if it is a large apartment building or even a medium-sized apartment building in LA, that also would be subject to that transfer tax. Now, that might sound like it's not a big deal. However, what I believe to be the case is that that cost is therefore passed on to the tenants of those buildings. You're in a situation where investors, whether that's companies or individuals who would be buying a $5 million apartment building, normally look for a 5% return, on what they are spending. Now, obviously, when it is 4.45% or 5.95%, that's gone. And so, therefore, an investment that looked appealing is no longer appealing to someone who's going to buy that property. Now, this means that either they don't buy it, which I think leads to a situation where a lot of landlords hold on to their properties and it is not worthwhile them putting money into renovating them, i.e., making the quality of these buildings better. Or alternatively, I think people do buy them, or landlords who hold them will basically put money into them to raise the rent significantly to make that 5%. So it has an odd situation where you're almost getting rid of that middle ground. You're getting rid of a situation where you have affordable, good quality units or properties to lease, and you now have either super high end expensive, or you have properties that are targeted at the lower end and are becoming more and more run down. So the actual quality of the property that you're going to be leasing is bad, if that makes sense. I'd love to know in the comments if you guys think that's not right. But that's how I see this playing out and affecting tenants a lot. The other side is that in the west side of LA, $5 million is a huge amount of money. However, if you go on Zillow, if you go on compass.com, any of these websites, Redfin, any of these places where you can see the prices of properties, $5 million is not a mansion. It sounds amazing, but $5 million is probably, a 4 to 6,000 square foot house, which is a big house but it is no way a mansion, and this is on a small lot. And so the people that are buying these may have bought a property 5, 6 years ago, at a couple of $1 million, and that has gone up so much in value that they are thinking, you know what, we need to sell this. We'd like to buy something larger so that we can, make more space for our family, have more bedrooms, etc. That's now been eliminated, because as soon as you go over that $5 million, you need to pay a lot more money in order to actually buy the property. And so that has kind of led to a stagnation in the amount of people that can effectively stretch and get over that $5 million level. And you're going to see a huge amount of properties that are going to sell at $4,999,999, because at that level, you do not have any of that transfer tax. Now, the interesting thing, sorry, I hope that gives a big overview in my opinion on it, but the interesting thing is a key member of the LA City Council, who was part of the board who passed this through, has actually been has given a quote to the Chicago Tribune. Now that might sound weird because Chicago is very far away from LA, but apparently in Chicago they are considering introducing a similar type of tax that is going to be there. And so this lady, who is called Nithya Raman, she has said that it was marketed at a mansion tax, and that was made it easy for voters to get behind, which I obviously saw when I went into the midterm elections. However, she does not recommend it as something that would go through. With a lot of digging, you'll find out it's been a disaster for LA real estate, said Matthew Hargrove, CEO of the California Business Properties Association. This is a market, and markets react to taxes. They're not coming anywhere near to the promised numbers. And that's the problem with doing policy at the ballot. So having people who are voting for something which are just seeing a headline as opposed to understanding the full scale of what this could be. Now, apparently, LA officials had predicted that the first year of the city's higher transfer tax would rake in $672 million for homeless services. And some people said that it could bring up to 900 million, which is a lot of money. However, in October, which is, the end of last month, housing officials acknowledged generating only 100 million. So that is, 1/6 of what was predicted. To give you a good idea of what happened through this year, the ballot was actually passed or came into effect on April 1st. And in March, there were 126 properties in LA, the city of LA, that were sold over $5 million. And however, in April, it went from 126 down to 2. So there are only 2 properties that actually transacted over $5 million, which is crazy. So you can see that effect and what is happening in terms of stalling the market, and the fact that people can't afford to pay this or aren't willing to pay this tax. So Loretta Thompson, who's a LA-based real estate attorney, said it's definitely slowed down all transactions. And for homes under 5 million, the market has been growing crazy. So again, it's kind of not just putting a bad situation on tenants, but if you are a home buyer who is looking to spend less than $5 million, that competition and that driving of the prices up to that $5 million mark has increased significantly. So you're going to see a lot of prices, I think, rising to just under that 5 million mark, because so many people want to get in at that price. And apparently legislators were saying that it could have been sold 5, 10, 20 years ago, and voters wanted to see the problem dealt with. And it's not the perfect public policy, but it's not bad. And that is said by Jerry Jones, who is a coordinator for the Greater LA Coalition on Homelessness. Now, some potential sellers could be hanging on to their luxury homes, as I said, while others simply sell it for just under 5 million. And that's from Sally Forster Jones, an amazing agent who works more in the luxury market. I've had some dealings with her before, incredibly professional team. And there is no transfer tax just below 5 million. So that's something that is kind of gonna happen, I think, more and more, as I've just said. So the fact that one of the people that actually passed this is turning around and saying that it is not something they'd recommend another city passing, I think that is something very interesting. There are apparently a couple of lawsuits which are challenging that now. I know that they elected a judge which actually was initially very against the measure and had declared that. They had to step down. they then appointed a judge on this ruling who was very pro the situation, had been involved in the actual passing of that. And now they are trying to find a judge that is impartial and is going to listen to both sides of the argument. So I'll keep you guys updated on ULA. We've got obviously some Sitzer Burnett trial updates, and I'm going to try and be doing this every single day. So thank you guys so much for tuning into the channel. I hope that this has been useful information that you'll find you can use, or you can actually take your own experiences from this and apply it to the real estate industry that you're in. But I think this is really interesting, and obviously I'm going to continue covering it. If you'd like to like, subscribe, and set notifications on the channel, I would really appreciate it. And I hope you guys have a fantastic rest of your day. Goodbye.